Hello and welcome to Retire Rich, Tales of Financial Freedom podcast with your hosts, Marc Hernandez and Carlos Lopez. I'm your producer, RJ Malik. Today, Carlos is out helping a client, which, happens a lot with you guys, right?
Very much so, but that's why we're a team. When one can't do one thing, one project, the other one picks up the slack.
All right, very good. So it's going to be you and me today, Mark, and today is July 25th. 2024. Let's have a conversation about what happened yesterday with the markets because, we were sort of chatting a little bit before we started, and you were intimating, and I, know this, when the market reacts like it did yesterday, people get nervous. How do you handle that?
Well, the first thing you got to do is make sure that you answer your phone. I can't tell you how many clients will say they've dealt with other advisors when things are going bad. They call their advisors. Advisors don't answer phone, don't return their phone calls, those type of things. And I've gotten new clients because of that. So yesterday I was ready. I mean, I'm on my phone, ready to every call that comes in. I got some spam calls that I shouldn't have taken, but because I didn't know if it was a client or not. So
Sure.
The main thing is. Right now, we've been in a long bull market since COVID. We had that big downturn, and then we've been going up. Just last week, again, hitting all-time highs in the S&P 500, the Dow. It's amazing, and it's very. Most of our clients are very happy, obviously, when that's happening. We don't hear from them, but yesterday we had the worst day we've had since 2022. And basically, it was just a sell-off. It could be a lot of profit taking. The Tesla, came in with results that people didn't like. Google came in with results that were mixed. So that affected the markets tremendously. So right now, what we stress is our clients to have a conversation if they're concerned. Okay, make sure if you've got another advisor. You have concerns, communicate with them these concerns. So if they need to make some adjustments, they can make some adjustments. But yesterday was a golden opportunity. I always listen to what Warren Buffett says, when he's fearful when people are greedy, and he's greedy when people are fearful. Well, yesterday people were fearful. So yesterday, even on my own personal level, I took the opportunity to make some buys on some stocks that were just, I was just aching to buy. And I was having a conversation with clients to say, now is a good time. If you're interested in adding to your account, it'd be a good time. And also, we didn't know what was going to happen today. Today was a critical day because the markets could, if they continued to sell off, it could have been horrific. Because what happens is the market will always go down faster than it goes up. I know 2 to 3 times faster. It'll go down, go almost like a straight line. And then when people get more relaxed, more calm, they see the opportunities, they'll start buying in. Well, today, just before we got on the air, I started seeing a lot of greens in the market. So you've got people coming in, seeing opportunities, and this could easily stabilize what happened yesterday. It might not make up for everything that was reduced yesterday, but it will stem the bleeding. So right now, I would tell clients to have a conversation if they have concerns. But again, if we've done the proper evaluation on our clients and helping them establish these accounts, we're probably not hearing from them. The first thing we do is when we take on a new client, the first thing we do is analyze the risk. Okay, we want to know, what type of risk tolerance they have. We have several mechanisms of doing that. We have questionnaires. We have many other avenues that we can have them answer that will help us determine their risk tolerance. But the main thing is that the big thing is if this happens, let's say I'll ask a prospective client, if the market goes down 10%, are you going to be concerned? If your account's down 10%, are we going to be having a conversation that you have concern? Say, no, I understand that could happen. What happens if it goes down 15 or 20%? They're gonna be concerned. But some clients will say, I understand that. I understand that can happen. I won't be all that concerned. So but based on how we interact with clients to determine the risk tolerance helps us to properly place them on where they need to be. And when a day like yesterday happens, we're going to be prepared, and they're going to be prepared. The second thing is very important to us is a client's timeline. RJ, of course, you're a young pup. I mean, you've got many years to go before you're even thinking of retiring. I'm at the age, I remember the Brady Bunch, and the Partridge Family, and I was, so I was. I'm at the point where it's part of my investing philosophy is thinking down the road to retirement. But if a client's timeline, if we're dealing with a client whose timeline is, I'm starting my career out, I've got 40 years or so, we try to have conversations about being more aggressive, staying invested in the markets, even if the markets are going down. We tell them at that time, let's go ahead and put more into the market. We try to educate them to be that way. But if we have a client whose timeline is they're retiring tomorrow, well, they might not be as aggressive. We still want them invested in some way, but we have to have serious conversations about what are there any major purchases coming up? Could they move? Could there be some major moves? You need to be aware of these things, of their timeline to help properly place their money. So knowing how much time they have to invest is very, very important. And another thing that's extremely important is if they're going to be taking an income stream. Okay, some of our clients, they may have pension plans, they tie in Social Security. Some may have income sources from other avenues, like rental income or other means of income. And so money that they give us to invest, sometimes they just have other reasons for having it there, whether it's legacy reasons or whether it's just they just want to accumulate more money. They want to go from one tier of being a millionaire to being a multimillionaire. So the income, so they may not take an income stream, but those that are taking an income stream, it's very important. And a day like yesterday, or if the market turns downward for any length of time and they're taking income streams, it can extremely affect their portfolio. So these are conversations. Yesterday, I had a few conversations with clients that are taking income streams, and we had to have a conversation if this market trended more downward, that we might have to make an adjustment to how much they're taking out. And because if you're taking out money and the account is going down and you're taking out money, it's multiplying how much your account's going down.
Sure, and it hurts the principal. So that will hurt your future.
Yeah. So these are conversations. If you're out there and you're taking income from your account and the market starts trending downward, you might want to have a conversation with your advisor. And if you don't have an advisor, you might want to look into getting an advisor that you can work with, because you could really hinder your future finances. Because I've seen in a down market, and a client's taking 5-6%, 4, 5 or 6%, and the market's going down, and they're taking money out, and with the market going down, they can see their portfolio decrease substantially, especially if it lasts a while. Okay, so that's very important. Is have conversations with our clients that have an income stream.
So it's important to talk to your financial advisor, at minimum once a year, if not maybe 2 or 3 times a year, just so, one, what they're thinking and understand their philosophy when things go bad. Because when things are good, no one cares. Like you mentioned before, everyone's like, okay, things are going well. I don't need to talk to Mark because things are going well. It's when things are going bad. But if you have a good understanding of your philosophy, then it's easier for a client, or let's say I'm your client, it's easier for me to say, okay, things are not where I should be panicking because I know how Mark operates. It's important to know your philosophy, and that comes through conversations. Is that a correct way of approaching it?
Well, one of the things we do, again, at the very beginning, when we take on a new client or onboard a client, is to get as much information as we can from the client. Of course, we talked about the risk tolerance. We talked about their timeline. We talked about what type of income stream they're going to need if they need an income stream. And so think of an upside down triangle. Okay, think of an upside down triangle. So you got, it's broad, it's more wide at the top. At the bottom, it comes down almost to like a funnel. So what you want to do is you want to get as much information to properly place your client. So if you have your clients properly placed at the beginning, then days like yesterday aren't going to be that dramatic. But don't get me wrong, if they linger, if you have downturns that are going to be extended, then boy, you need to make some adjustments. One of the things we do is once we've set up, onboarded a client, and we try to place them in the best position for them to succeed, is we monitor their accounts on a weekly basis. I'm very fortunate. David, our IT guy and does everything guy, he has created so many ways for us to work with our clients and to monitor our clients. He's like a mad scientist on everything he does to do that. Well, what we do is we look at our clients' accounts weekly. So every single client, and we have quite a few clients, every single client, we see what the change is from last week to this week, in terms of their accounts. And if we know that we've had a few down days and they're down a little bit, we're not that concerned. I mean, we're not that concerned unless we're hearing from them. I mean, if a client is concerned, they call us, then we're going to have a conversation about if we need to make some adjustments. But if we don't hear from them and everything's going okay, we're fine. But and in the way we monitor these clients weekly on this, I call it like a spreadsheet. At the very bottom, it tells us how much they've gained since they've been with us, percentage-wise and dollar amount. And I just like to see those numbers grow. And if they're growing, and they have been growing here over the last year and a half, obviously there's no concerns. But if we see clients' assets start dwindling a little bit, then we're gonna initiate a conversation. If we think that we need to make an adjustment, especially if we know our clients fairly well in their temperament, and we know that if it goes down much further, they're going to probably be concerned. So that's what we can do to alleviate major disasters.
Yeah, I was going to bring up the point where you've been talking about how you have conversations with your clients, how important it is. It's almost like you are, we're going to go back to and use a baseball analogy because I know you're a big baseball fan. You're almost like a scout where you're gathering information and then you're handing it off to the manager of the team so they can anticipate what's going to happen with the team they're playing next. You have to be aware of everyone's strengths and weaknesses. Okay, this batter is susceptible to the breaking ball, or if you throw a fastball high and up, he's swinging at it. You have to know your clients when they're going to get antsy, and so you're anticipating who you're going to hear from, and to be prepared and have answers almost before they're calling. Am I understanding that correctly?
And the conversation, so RJ, you're calling me because you have concerns. The first thing we're gonna talk about is validate those concerns. If you're concerned, we're concerned. And then we're going to go back and we're going to go to make sure, see if anything has changed in your situation since we opened your account, or since we maybe had our last discussion on your account, which is health-wise. Is everything in the family health-wise?
Yeah.
Financially, have there been any financial changes to your situation? Helping out kids, we have a lot of clients that financially help out their kids. So these are questions we'll ask immediately, because if they say yes, oh, this happened or this is happening, then it's not so much they're concerned about what's going on in the market. It's just they're concerned about being able to meet that objective of either a health issue, a financial issue, or a family issue. So these are things, and many times the clients you hear from, you usually hear from them the most. Okay, so I would say you might think, oh my gosh, Mark, where do you have the time? You're probably on the phone 48 hours a day. No. It's just usually the clients that are more in calling more or reaching out to us more, is they're very involved in monitoring their statements. They're very involved in the managing of their money, which we like. So we expect them to call, and but a majority of our clients, again, we try to set them up properly to begin with. And if we've done that, and there's been no major changes in their situation, health-wise, financially, or family-wise, most of the time they're as long as they're making money, as long as their accounts are progressing, we're probably not going to hear from them, but they hear from us. We reach out to them. We have ways of reaching out to them on a quarterly or monthly basis in the form of emails or in the form of sharing information. And that I give all credit to David. He's fantastic in handling that. So we have a way of doing that. Another way right now and it helps us to sleep better at night is we work with a 401k optimizer. We use it on 401ks. We use it on the thrift savings plan. Carlos is fantastic at presenting that. He does workshops on that. We reach out to individuals, usually clients' children that are working. They're perfect candidates for that, or anyone that has these the 401k at work or 403bs or the thrift savings plan. We have a way of managing that account for them while they're working. We attach an algorithm to that account using the 401k optimizer. And here's the thing, it takes all of the emotion out of it. It allows them to, they will be told when to make changes on the account. With the market, if the market is trending upward, it's probably going to ask them to be more aggressive. If the market is trending downward or looks like it's going to be downward for a while, it'll tell them to make adjustments to limit their liability and losses, but it keeps them invested. That's the thing. You got to stay invested, because I've seen so many cases of clients in their 401ks or whatever moving money to cash when things are going bad. And then when did they come back out? And if you miss those big bump days up, you've missed a lot. I mean, and it shows that if you've missed some of those big upward days at the beginning of a turnaround, then you won't be able to make it up. So that's one thing we have and offer our clients is a mechanism to help them manage their accounts while they're working. And then, of course, when they leave or retire or they change positions, they've already established a relationship with us, and we're ready to help them manage it on the outside.
So you're a lot more proactive than I would even think about when I'm dealing with a financial advisor. I in my head, this is my perspective, I'm not a financial person, that really most of your work is when the markets are going up and down and you're reacting. But what you just talked about was being proactive, and that was it's comforting to know that you have the ability to do that.
Not only are we proactive in managing money and managing accounts and portfolios, we also are very proactive with our clients on their safe money. Because again, if we have a client that comes to us, we go through reviewing their risk tolerance, we go through reviewing their timeline, what kind of income stream they're going to require. And at that point, we design a program for them. And of course, the program is going to be designed to be things change. Their lifestyles can change. We can change along with them. And that's why we have these conversations. But the thing is, if a client is just, oh, I can't take stomach losing one penny. Well, we've got safe money programs. We've got programs but even our safe money programs were proactive. We've got clients that as time goes on, there's opportunities for them to increase or enhance the safe money program they're in. And we reach out to them to show them what they can do. And if they want to, we can make these adjustments for them. So we're very proactive, RJ, in everything we do.
If you don't mind, because I've never heard the term safe programs in talking with safe money with financial advisors. Can you elaborate a little more how that works?
Sure. So RJ, we are a holistic type of organization. We try to help clients with every type of program or problem they may have financially. We don't have a dollar limit on what they need to have to work with us. I know some advisors will not talk to you unless you have $500,000 or $250,000 or above. No, we help everybody. But I'm going to share a story. We've had clients that come and started working with us that gave us $10,000 to work with, or 15 or 20. And next thing you know, I've had 2 lottery winners. I've had clients that down here in Texas, they sell ranches or properties, or next thing you know, they've got multi-million dollars to work with. So the thing is that, you never know. But our job is to work. We want to work with everybody. We even have a motto, serving the underserved. We want to help those that other advisors aren't going to help. Okay. And that's very important to us. So again, I got a little off track, but the Safe Money program, since being a holistic, we have fee-based programs in managing money. We charge a fee to do that. But we also have, to help everybody, we also have commission-based products. And commission-based products are usually with insurance companies, and they have provide a lot of guarantees. And but nowadays they have tremendous upside potential in some of these programs. But the thing is that we fully explain to our clients how these programs work, and if it's suitable for them, then we put them in that. And when I call safe money, that their principal will be secured, and that way the money they worked very hard to earn, they're not going to lose it. But we normally a normal client that's retiring, some of the money will go manage, and some of the money might go to safe money or commission-based products because that is what they need. Okay, and let me tell you, over the years, I've been doing this 38 years, working with both type of products, and we've never had any issues because clientele know what they have, and they know how it works, and we can work. Sometimes we work between the two. I mean, there's times with clients, markets are doing well, we move some money from safe money back to manage, or vice versa, just depending on their situation. And we'll have conversations about that. But the thing is that the most important thing I want people to get out of today's conversation is, don't bury your head in the sand. You look at your statements. If you don't understand something, that's when you reach out to the advisor, so that way he can go over with you. If you need to make a change because you're concerned, they can help facilitate that change. And that's the most important thing I wanted to have regarding this conversation today, but also how we help people alleviate those concerns by making sure they're properly placed to begin with, servicing the account, answering the phone when things are not going well, like yesterday, but also having software using the 401k optimizer to attach to their accounts that basically takes all the emotion out of when to make changes on their accounts.
Okay, very good, very good. And so a day like yesterday is not something that you're afraid of. A day like yesterday almost sometimes creates new opportunities.
We are very much so, but I'll tell you, we have the experience. We've been through some dark days. I was an advisor in 9/11. That was horrific time. The markets went down tremendously. Took a little while to come back. It was a dark time in our history. But you're there answering the phones, alleviating your clients' concerns, helping them navigate what they needed to do so they could feel comfortable. Then 2008, the mortgage security crisis. 2000 was was everything, computers not going to work anymore. Back in COVID. So these were dark. I mean, COVID. These were dark times. And the thing is, we're always on the phone with our clients, even though we were when COVID first came out. I mean, I was isolated in my home for a couple of months. I know maybe you were. I know
Yes.
a lot of our clients were, and we were doing everything over the phone. We weren't even seeing clients face to face. So, those were dark times. Yesterday was, to me, very expected, and I still expect several days like yesterday in the near future, because there's people that are going to be taking profits. People are going to be they're going to be concerned about the outlook. And I have clients tell me all the time, right now we're having conversations. What happens if so-and-so wins the election? What happens if so-and-so wins the election?
Right,
What's going to
right.
happen? I tell them, in the short run, there may be a little blurb on the markets, but let me tell you, the U.S. consumer is insatiable. They're going to buy. They're going to find ways to buy. They're going to borrow money to buy. They're going to get a second job to buy. This economy will always flourish because the U.S. consumer is the biggest consumer in the world. And in my 30 years of experience, I've seen the Dow climb from 2,000 to, again, all-time highs, 37,000. I think the outlook is, I wouldn't be surprised in the next 2 or 3 years, 4 years, it gets to 50,000. I can see the NASDAQ, probably doubling maybe in the next 5 or 6 years. Everybody says it's artificial intelligence. I just think it's just human nature. I just think people are going to see the opportunities and they're going to buy. Now, when I started in this business, hardly anybody, the normal layman, bought stocks or were in the stock market. Remember E.F. Hutton? Remember
Yes.
E.F. Hutton? People back then. Well, they had stockbrokers, and the stockbrokers back then were for the elite. Okay. Well, after COVID, I think COVID introduced the markets to the layman, to the young professional. They got involved in cryptocurrency. They want to make money fast. The meme stocks, people made money. You read that movie, GameStop, the movie that came out where they were shorting the market and beating billionaires, multi-billionaires, and killing them, and they were making the market. All of that has changed, where now there are more and more people gravitating to the market, and they can participate in the market, and that's what we're trying to do in working with everybody. We want everybody to participate in the market, whether you have $25 a month to spare, or whether you're a millionaire. We can help you. Okay, we can help you. We have the tools. We have the experience. We have the work ethic. Let's say the work ethic to help you. So we mentioned in a previous podcast, I'm way out of my comfort zone. I was in a real nice situation. I could play golf all the time, travel all the time. I had lots of money. I could do whatever I want. But the thing is that I saw the opportunity to reach out to more people. So that's why we're doing these podcasts. That's why we're more involved in social media. That's why we're going to be doing more virtual webinars to reach people all over the country. We want to help more people. I want my legacy when I leave this earth to say, wow, this guy was proactive in trying to help teach me how to be financially independent. So put that on my tombstone. Well, not on my tombstone. I want on my urn or something before, Marc wanted people to be financially independent. So, outlook, as I stated, I'm very positive about the future of our economy. I'm very positive about the future for our clients. We have the tools, the people we work with provide us with the tools and technology to help make them better financially. And so we're real excited, and I hope you can feel that excitement over this podcast, because that's what we're here to do. We're here to help you become financially independent.
And that's a perfect segue into how can people contact you, Marc?
First, you can reach us by going to our web page at MAH@financial.biz. Or Marc, M-A-R-C, at MAHfinancial.biz. And you can call us at area code 956-994-0407. You can also go to our website and navigate it, and you can even sign up for an appointment, or if you'd like to visit with us, you can do it there also.
Okay, very good. Marc, we're going to wrap it up. That was a very interesting, very fascinating, just a real good podcast to talk about when things look, I don't want to use the word bad, but when things aren't going as smooth as you would like them to go. And I thought it was really well put to, show how you can see the brighter side, and not everything, even if things are not going the way you want them to go, there's still an upside. And I thought you did a good job of presenting that today.
Well, thank you, RJ. I look forward to talking to you again soon.
Yep, looking forward to your next podcast, and thank you for listening to today's Retire Rich Tales of Financial Freedom podcast. Please like, follow, and share this podcast with friends and family. Until next time, for Marc and Carlos, I'm R.J. Malik.
Thank you for listening to Retire Rich, Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H Financial. M.A.H Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.
The views expressed herein reflect the views of Marc Hernandez and Carlos Lopez as of the date referenced. These views may change as conditions change. The views expressed herein are not intended and should not be construed as investment advice, and they do not address any individual's specific situation.